Welcome to Real Estate Ride Along, episode numero nueve.
What's that, 9?
Yeah,
I dropped out of Spanish.
yeah, 9. Episode
Thank you, Shemeika.
9. This is my dear friend Mitchell Stelling with Revest Loans, and I am today Shemeika Fox with your favorite Fox Realty Group.
Wow, that's new. Without your favorite Foxy Realty Group. It's a good one. We'll put her link down below, or it's actually going to be on your YouTube, so you'll be able to find her.
You can find me.
Yeah.
I'm on the interweb.
Yep.
Anyhow, strangely, consumer sentiment for home buying and selling is growing. This is nationwide, despite the fact that our March numbers came in actually a bit sluggish.
I know.
So we had a pretty slow March, considering. Resurgence in mortgage rates as well as inflation helped soften the sales, I believe.
Yeah, I believe so too. I was having a conversation today with an agent, wonderful agent in town, almost as good as Shemeika.
Don't say anybody else's name on here.
I'm not saying
I'm just
anyone's
kidding, I'm just
name.
kidding.
Okay. I'm gonna start listing. But no, we like mutually agreed that we're starting to see a little, like, even though it doesn't feel like a slowdown, there is a tad slowdown just because the last 2 weeks we have seen like rates skyrocket in a sense. Like we're at a high, like a 6-month high.
And I think that the rate rise was surprising, like the
It
CPI
was.
and the job
We
report.
were all kind of expecting
the
a
opposite
little bit,
direction.
totally,
And
and
it-
it's like, holy cow. And
Yeah.
then the Fed's now talking a little bit about like, oh, we're not gonna be cutting rates in 2024. And I think you called that one.
I think, we talked about that last week. It was
and
that
it
I
was
was going to
just-
say an unpopular opinion, and I do not believe that we're going to see a rate reduction in 2024.
And I think you're right on, sadly. I
Yeah.
wish you were wrong on that one. But
I do
darn
too.
it,
I
again.
really do. But also, like, again, we're going to talk a little bit about if we were to hit a recession, which means that we have job loss and our CPI numbers are down, that's when you would see a very rapid reduction in mortgage interest rates. And we don't want to see that. So where's this happy medium
Exactly. The sweet spot.
of we're not in a recession, we have a healthy economy, we have jobs for those who can and want to work,
Yep.
and we have interest rates that make housing actually affordable.
Exactly.
I don't
That's
know
the
what that
hardest
is.
thing. Yeah. No, we need to get
Especially
to that
again,
sweet
living
spot.
in an area that is so expensive.
Yeah, throw insurance into the mix. I know
Right.
I'm like a downer today, guys. Sorry.
No,
But no, it's
snap
just
it
like
out of it.
no, it's the
This
truth.
is
But there's
just
ways to work
education.
through it. I mean, it's just the reality that we're in, and there's ways to work through it. And the positive, though, I want to add a little positive thing to my story. Is if you can afford or figure out a way to make it work financially, it's not a bad time, like right now, like this week, to bid on something, because there's some people over the last few weeks that have been sadly priced out of the market, and there's more opportunity. So potentially less offers on homes, things like that.
Yeah.
We are in a low inventory market.
Yeah.
So
So our demand is
yeah,
high. And
I love
all of the offers that I've written in the last 2 weeks,
Yeah.
which is like, I think I've written 5 offers.
mhm.
All of them had multiple offers, and they actually, strangely, usually we'll see multiple offers on that entry level market. But I wrote an offer on an entry level property, and then I also wrote an offer on a very advanced, expensive piece of property that I would say would be more for the savvy investor
Mhm.
rather
And
than
you got kind of the same.
multiple
regard-
offers.
Interesting.
Yeah. I mean,
Yeah.
it wasn't like 10 or 12 offers. It was 3
Yeah,
actually,
but
strangely,
there's
on all of them,
people-
but
interesting.
multiple offers.
Yeah.
Yeah.
So,
So we are still seeing that. And this is interesting too. Now, this is nationwide. So Santa Cruz is
Yeah,
very different. If you want us
exactly.
to run the Santa Cruz numbers, I will do that actually at the end of the month. I will give you the March inventory and statistics for Santa Cruz County and specifically specific neighborhoods. But for the nation, we actually reached the highest median sales price that we've ever seen in March, 393,500. That's
wow,
for
and
the
that's
entire
nationwide.
nation.
I was
Yeah.
like, darn, if that was in Santa
I know.
Cruz.
That's why I said I'll run the numbers. If you want them, call me and I'll do
For
them
sure.
now. But you'll see in my monthly market
So-
update, you'll see the specific statistics for Santa Cruz. So clearly, like, that's a lot less than Santa Cruz, but this is
Yeah.
nationwide.
But we're at a high.
Yes.
I interrupted.
No, that's right. Yeah.
And I mean, I think that's just because all over, I mean, especially in Santa Cruz, it's a lower inventory market.
Mhm.
And because of most home owners, and I would say buyers, are locked into a low interest rate or
Mhm.
their mortgage is paid off,
hmm
why would they sell at this point and get it.
To a higher interest
Unless
rate.
it's a life event or something is
Yeah,
changed.
and
I mean,
even
that's the
that, I
thing,
know, like a lot of people are
or
like
just
really having to
holding.
thinking.
Yeah,
thinking
no, I know.
about it.
Holding out, like, can we live like this? And
Yeah.
just wait until I know.
Right.
It's interesting.
Interestingly enough, the Northeast saw the highest rise in home sales, and that was up 4.2%.
Okay.
With a median sales price of 434,600. The Midwest sales dropped 1.9% with a median price of 292,400. The South experienced a 5.9% decline with a median sales price of 359,100.
Interesting.
Yeah.
So different, or maybe they have more inventory. You
Yeah.
see, never know.
Yeah. But again, median sales prices continue to climb across the nation and in Santa Cruz as well.
For sure. And it's been doing that, God, for years.
Yeah.
Yeah. And especially during COVID, just shot
right up. Gosh, that was what it was like 22% a year in a year.
Those were called the unicorn years. That's the name I have for it. I'm going to get it set in the dictionary.
With the cooling in the housing market, the builders have put a pause on construction, also with the high interest rates, because a lot of them do finance part of the project or all of the project. So they've put the brakes on some building projects, which is going to actually create higher demand with the properties that are already pre-existing home sales. So that's always interesting. Like we are a supply and demand economy, and when there is more demand than there is supply, then you're going to see these multiple offer situations, and you're going to see prices increase. So I keep on talking about this, and I think that this is such an interesting subject. I get that interest rates are high. So it's having this negative effect actually on the inflation with this 1/5 of our economy, which is housing and real estate.
100%.
So if you can't sell your home, or you're not going to sell your home because interest rates are high, then that is meaning that there's a deficit in supply and there is a higher demand, which is driving prices up, which is why we're seeing our prices grow and inflation in the market. So I kind of was playing with some ideas, and I think we've talked about this before.
I want to hear these ideas.
But what do you guys think would be some fun ways to manipulate and maneuver the market so that we can increase our supply, meet the demand, and actually maybe flatten or level the market that we're in right now? I thought that it would be cool, like if you're in, let's say, like a 2 or 3% interest rate,
like your tax base.
Like what if you were allowed to do a one-time transfer if you were either remaining in the county that you reside in, or actually, no, that wouldn't make sense. If you were leaving the county that you reside in, you could do a one-time transfer out of the county.
I think we'd see a lot more sales and activity.
Right?
With that. I know the mortgage company wouldn't be too stoked on it, but that'd be amazing. Yeah. I think, it would allow people to.
Or even if they like just said, okay, you can do a one-time transfer and you'll be able to purchase with like a 1% higher.
Yeah, something, give them some kind of break. Because like you said earlier perfectly, and I mentioned it a little bit, people are like holding tight.
They're holding tight.
Understandably. I mean, you run a payment at 3% next to one that's at 7.5%.
And it's really quite.
And it's definitely a little different. Yeah. And it's just, and there's uncertainty in the world a little bit right now. And I understand where people are coming from. So it's just, I think, working with the right professional to educate you on the market, Shemeika, and making sure, I'm going to go on a tangent real fast, so I won't be that long, but just making sure. I get calls from clients and they're like, hey, like, what's your rate? And I get like, rate is obviously important. Like, I love a good deal. I want to get a good rate, but there's other things associated with it. And I can get a client any rate they want. Right. I mean, if they want a 4%, I can get them that. However, there's a cost associated with it. So it's strategizing, how long are you going to be holding this for? What is the reason behind it? There's so much more that goes into it. And that's where, just really having that open discussion with your professional, your real estate agent, or lender to really tailor it and build it for your specific situation. Are you bored?
No, I'm just listening. I was just driving along, right along real estate.
I forgot I'm driving and talking about rates.
Yeah, no, that is really important.
Right? It's true.
Okay, so despite a sluggish March, we have nationwide seen the biggest increase. We're at the highest median that we've ever seen in March, consumer confidence seems to be growing.
I think so. I mean, right now it's not great.
I think we usually have about a 1 month lag whenever there's a shift in interest rates in an upwards trajectory.
I'll say over in like Santa Clara market, the consumer confidence there is through the roof.
It's insane.
It's like so different.
Yeah, and we've always been about 6 months behind.
Yeah, that's exactly what I've heard too.
Yeah.
So it'll be interesting. We're getting there, guys.
Yeah.
We're getting there.
And we're still seeing a lot of cash in our market as well. So cash always beats out interest rate because you don't need to depend on what they're pricing them at.
Great bridge loan product. Can compete with cash.
Yeah. I think that's it.
I think that's it too. I think like the last thing we'll touch on, who brought this up? I think you were with me. We were talking to, it was either a client or maybe a friend, someone at your open house that was bringing up that they just got dropped by their insurance.
This is actually very important.
I thought that was
if you have State Farm, thank you for bringing this up, Mitchell. If you have State Farm, they are making
cut. No, this is live, girl. You keep going. This is real, everyone.
No, if you have State Farm, I have heard that they are dropping many of their Santa Cruz County insurance policies that are in high fire zones. So it is really important to start shopping now for new insurance policy.
Totally.
I believe this dropping is taking effect in August, and we're in April. We're at the end of April. So May, June, July. Be proactive.
Start to get quotes.
If you want some recommendations on who to call to get some insurance quotes, give us a call. We have great people that we would be happy to set you up with. But that is thank you for bringing that up.
For sure. I just thought that was something we've heard on the ground.
Yes. State Farm is dropping many policies in August in our Santa Cruz area.
Yeah. So just be prepared.
Yeah.
I think that's like the big thing of 2024. Be prepared. You never know what's around the next corner.
Yeah.
It's going to be bright though. There is a light at the end of the tunnel.
I mean, I feel like we just keep on talking about like the NAR settlement, insurance.
Our industry has definitely seen better days, but we are going to get through it.
We're going to weather the storm.
That's why it's so important to work with the right professional
to
guide you through it.
There is always an opportunity for everybody who wants to seize the moment, as they say.
I so agree.
Yeah.
And it's going to be good, y'all. 2025, it's going to be our year.
Thank you for tuning in to Real Estate Ride Along. I'm Shemeika Fox.
I'm episode 9 and Mitchell Stelling with Revas Loan.
What did I say? I'm Shemeika Fox.
I said I'm episode 9. No, you said I'm something foxy.
And that's Mitchell Stelling, episode 9.
Yeah.
See you on the next one.
See you later. Number 10.